for more on the Eurozone. We are joined in studio here in Toronto by Alex Dershevsky, founder and managing partner at Recovery Partners, and from the RBC trading floor in Toronto, George Davis, chief technical analyst for fixed income and currency strategy at RBC Capital Markets. Welcome, both you gentlemen. Thanks for joining me today. I'm sure, Alex, given the dozens of conversations we've had over the last 6 months, that you were not lulled.
I know. Well, Howard, a year and a half ago, we told you here on this program that if the Europeans wanted to go the bailout route, that this was a real risk, that you could end up with a mass downgrade of all the countries in Europe because of the additional debt that they were going to be taking on through the bailout mechanisms they were establishing, and also because the austerity route is imposing a lot of strains on government finances. And now this is all playing out to script. This is absolutely no surprise.
So what are the ripple effects, though, if these downgrades do occur? I mean, who has to change their portfolios because they can only hold such and such rated bonds, etc.? What kind of capital moves into so-called safe havens like U.S. Treasuries, German bonds, and so forth?
Well, yeah, you're going to get those perverse effects where, because you're getting a downgrade in one AAA country like France or Austria, they're both going to go down. You might get a flight to quality, flight to safety in the U.S. currency. But we all know that the U.S. has got its own set of problems, and they don't have any fiscal rectitude in operation there. They've got their own deficit problems. So you're getting a lot of perverse effects here. But the reality is, people will probably just rewrite the rule book. If you see what the ECB did with their repo operations, a year and a half ago, they weren't able to accept any repo collateral rated less than single A. They've thrown that all out now.
Repurchase.
Yeah, repurchase collateral. They've thrown that all out the window now, and they basically will take anything, including a kitchen sink, and they'll discount that for you if you're a bank in need of liquidity. So a lot of investors, I think, will be rewriting their rules. Those guys that could only invest in AAA paper, we're running out of AAAs, and I think there'll be a rule rewriting.
So what does it matter what you call it? I mean, if the highest is a AA or whatever, then
that's
what
AAA,
right?
That's what zero interest rate ZIRP policy is giving us. There's no way to value assets anymore because you're on a zero interest rate base. There's a complete dislocation in all of the asset markets as to what relative value should be. Crazy world.
Alex, I want to bounce a couple of Draghi comments off of you from yesterday, the president of the ECB. He was sounding more positive yesterday, sees some signs of European economy stabilizing, he said. He also said that some of the stressed nations, i.e., I guess the peripherals he's talking about, have been making what he called significant progress. Do you think he's whistling past the graveyard?
Well, the first rule of central banking is to never tell the truth. And the second
rule... Is that not a little harsh?
And the second rule of central banking is to never forget the first rule. Mr. Draghi is obviously talking his book. They've gone down the austerity route. They've gone down the bailout route. They've got to try and chat up the markets and make the markets believe that this strategy is working. As the other guest mentioned, it's not really working. There's no solution on the table. We had an opportunity to put a good solution on the table with the summit in late November. It didn't happen. We're back to the policy of incrementalism. And the markets are going to recoil. The markets are going to recoil, and that's why Draghi is trying to pour some oil on the waters here, saying, "Oh, don't worry, folks. We've got a nascent recovery." Well, a month and a half ago, the ECB was forecasting a recession in Europe, and so is our central bank. They're forecasting a recession for 2012, and this is in the midst of huge financing requirements that are going to come down on all of the governments there. France has to raise 400 billion euro of roll over 400 billion of funding.
So this credit downgrade, if it happens, could hurt them. It's going to cost them more.
It's going to cost them more, but it's rapidly becoming a situation that not what price some of these countries can raise money at, but whether they can raise the money at all.
And you don't think France could raise money?
Sure, they can raise money. It's going to cost them more, but I'm talking about a place like Greece can't raise money. It's unfundable right now. Without the bailout mechanism, it is unfundable.
All right, gents, we have to leave it there, but thanks to the two of you for joining us today.